Hi, I'm Ben Larson with Larson Home Loans, and this is my mortgage education series. Today, I'm talking about FHA loans, where I'll try to cover as much as I can in around 5 minutes as an intro to FHA loans. Of course, it's known for its low down payment requirement of 3.5%, and as low of a credit score as 580, with the 3.5% down still in play. So quick math on that, a purchase of $300,000, your down payment's going to be $10,500. Note that the down payment is separate from closing costs, so that's not all the money that you're going to have to bring to the table, but it's a big chunk. For more information on closing costs other than down payment, watch my video on understanding closing costs. Technically, FHA does allow a credit score as low as 500 in their guidelines, but that raises, when you get below 580, it raises the down payment requirement to 10%. So you lose that 3.5% down option. And not all lenders that offer FHA loans offer those minimum requirements required by FHA. Some of them even require a score over 600 to apply. So lenders have overlays, or what those are called, over the minimum guidelines sometimes set by certain loan programs. So keep that in mind. And that's kind of my job as your lender, is to help guide you through that process. And I have, being on the broker side, I have over 80 lenders I work with. So we can almost always, if there's a product out there for you, I can find it. FHA loans are one of the least restrictive in terms of past bankruptcy, requiring only a 2-year waiting period. That goes by the discharge date on the court document. So we got to get those documents, turn them into underwriting. We go 2 years from that date and you're eligible. So you compare that to conventional loans, it's typically 3 to 5 years on most loan programs with most lenders. So FHA is significantly less restrictive when it comes to bankruptcy and credit as well, like I mentioned. So another area where FHA loans shine is in debt to income ratios. FHA loans will allow you to push your debt to income ratio all the way up to 55%, and that's pretty safe with all lenders. Some lenders claim they can even push it up to 56, 57, but we certainly like to keep it below 55, for a smooth underwriting process. Again, let's compare that to conventional loans, where they often restrict you to 45%. You can push it up to 48, 49 sometimes, but a 10% bump with FHA loans allows you to buy more house with the same income with less, restrictions on you. Mortgage insurance and upfront fee. That's another aspect of FHA loans. There is an upfront fee of 1.75% of the loan amount, which can be financed. So it's added to the loan if you choose. You can pay it out of your pocket also. On top of the upfront fee is a cost of 0.55%, and that's for the mortgage insurance. That's added as a cost into your loan. So that's a factor of the payment. I will point out that even with the upfront fee and mortgage insurance added to the monthly payment, it's not uncommon for the monthly payment on an FHA loan to still be lower than it would be on a conventional loan. And sometimes even if you're putting 5 or 10 or 15% down, it still makes sense to do an FHA loan, because the interest rates in the last few years have been significantly lower on FHA loans. So there's benefit to these loans beyond just the low down payment and flexible credit scores. And let's jump next to the minimum property requirements. Realtors oftentimes, or listing agents, shy away from FHA loans because they do have some additional property requirements, but they're really not that strict. Let's break it down. We call them the 3 S's. We'll start with safety. The house should provide a safe and healthy environment. Security. The property should offer its occupants protection. Soundness. The home shouldn't have any structural defects. So these are all pretty vague, and ultimately they're going to come down to the judgment of the appraiser on the property. It's up to the appraiser to call out defects or concerns that they see with the property, like exposed wiring. So as long as the property has a reliable heat source other than wood heat, it has a kitchen, a bathroom, a roof without obvious signs of a leak, and no peeling paint. FHA is not a fan of peeling paint. If there is some peeling paint and it's not dramatic, maybe work with the realtors, get that taken care of before the appraiser gets out there, so that we can keep it moving smooth through the process and not have to do repairs and get a re-inspection by the appraiser. Those things really slow down and bog down the process. Next, we're going to talk about loan limits and the number of units allowed on FHA. FHA does allow the purchase of an owner-occupied property from 1 to 4 units, and the maximum loan amount goes up with each additional unit. So they are location specific. So for Humboldt County, where I'm located, where I do most of my business, a single family home has a loan limit of $524,000 $225. A duplex, 2 units, goes up to $671,200. A triplex, 3 units, goes up to $811,275. Now, for a fourplex, the loan limit goes all the way up to $1,008,300. So with those loan limits, they're not very restrictive in Humboldt County. It really leaves you a lot of open options considering the values of homes in this area. So to wrap this up, I'll say that FHA loans are a great option, not only for first-time home buyers, but for repeat buyers, move-up buyers, for savvy buyers. Sometimes these are the best option available to you. If you have questions or simply want to talk about a purchase you're planning, then please visit my website, larsonhomeloans.com. You can contact me from there. You can find all of my other content, my educational videos. I do a monthly Redwood real estate report where I give market keys of the month. And please don't hesitate to contact me with any questions or if you need to buy a home. Thanks again. This is Ben Larson signing off.